Hey everybody, welcome back to Taking Trades. Wow, do we have some weirdness to talk about today? Did the gap down in natural gas shock you as much as it did me? To make the situation even more confusing, have you seen the Arctic blast that's on its way into the US from Canada? Well, in today's video, I'm going to show you the weather map of this cold blast. I'm going to give you my opinion on the price action we're seeing on the natural gas futures chart. And also, I'm going to share a bit of natural gas news with you. So stay tuned. So remember last week I told you there was going to be a break in the cold weather, and then right behind that break there was going to be a cold blast? Well, I have a rare photo of this beast of a cold blast, and I want to show it to you right now. This Arctic blast looks to be moving south towards Texas and also spreading out into the east and over the Great Lakes, all the way to the northeast, which we all know could lead to some crazy snow and low temperatures. Now, natgasweather.com, they're indicating that this week's demand is rated as very high, you can see here, and this makes things super confusing given natural gas prices are getting hammered this morning and into the early afternoon. So what should we make of all this? Well, let's go ahead, let's just dive into the charts. Let's talk about support and resistance levels so we all have a better understanding of the situation at hand. Hey, real quick, if you'd like to show your support for the channel, all you have to do is just watch one full ad. It takes about 30 seconds. It allows the channel to grow so I can continue providing free content where you as the community help to decide the topics that we discuss. All right, let's go to the charts. All right, we've got /NGZ19, which is the natural gas futures chart for December 2019. And I want to just start by looking at the daily chart, looking at the support and resistance levels, talking about and reviewing a little bit of what we went over last week, and just discussing this massive sell-off here, this craziness that we saw this morning. So as we all know, we had this really great gap up, and a gap up being from this level here of 2.698, and then gapping up to about 2.781. So we had this gap with this push up to about 2.885, and then we got rejected back down. We got a nice slowing doji here. It looked like a safe place to start nibbling a few shares for me personally. Again, my opinion. Don't ever take trades based off my opinion. Just use my videos as additional information to help inform trades that you're putting together. This is just my take on things. So this would be a spot where I would nibble shares, looking for the push back to the upside, but instead we got the warmer weather, we got a big gap down, and then today we just sold off. So when I see a situation like this, it starts to look to me like an opportunity. Yes, we gapped down, and yes, if you were holding shares, if you nibbled in here, you're down on your shares. But if you're nibbling shares in small chunks at a time, just little bits here and there, and you're trying to get a nice cost basis worked out, then you could start to nibble more down here. Now again, this is just what I do, so do whatever works for you, but I'm seeing this price action come down and touch these two trading averages. We got the 50 simple moving average and the 20-day simple moving average, and it's touching both of those. And if you look really closely, you can see a wick on the bottom side there. That's showing that it touched it, and now price action is moving away from it. So what I'm seeing here is another nibble opportunity for me personally, because cold weather is coming, and after seeing that map, you can see that there's a big cold blast coming. So we got a warming in temperatures, which is that break or that gap between the two storms. We talked about that last week, and now the weather warmed up, we got decreased demand, we got a price fall, we got just a hammered Monday. And now as we get into this week, that colder weather is going to come from the north. Demand's going to be very high according to natgasweather.com. If that happens, if we do get that high demand, this should start to work back to the upside. So this just looks like another nibble opportunity for me here and here. But pretty crazy how this gap just sucked it all the way down to the bottom. And we talked about how that's a risk. If we break down into this gap, it's very likely that we're going to see the other side of the gap. Now, the bottom of this gap at that 2.698 or 2.7 you could call it, could act as support to go higher, or we could break through it and keep going lower, and we did just that. And you can see that the price action looked for support on these moving averages. So now that we've touched them,
Me personally, I would be nibbling here a little bit and then waiting for things to start working back to the upside with the addition of the colder weather. So let's look over at UGAS. We're going to do /NG. We're going to look at UGAS and we're going to look at DGAS today just to see all three of them and how things are working out. So I was looking at this earlier. I left our lines up from last week, and it looks, we still have that 200 simple moving average looming overhead, and we got the massive gap down. So if you were nibbling and holding shares, in this $18, $18.50 area, then you're down in the 15.5 area. But again, you see that bottom wick. It's pulling back up, so it means that price is retreating. It found a little bit of support right on this 20-day simple moving average. The problem with UGAS right now is it's now below the 50, so it could pinball a little bit between the two. If it doesn't and breaks back above and settles on top of it, then that to me is really bullish for my trades looking to go back long. And then we'll deal with the 200 simple moving average when we get there, if we do get there. This is not a concern right now. We just need to worry about finding a support level and then starting to set a higher high tomorrow and the next day and working back to the upside. Now again, if you do nibble here and we start to sell off even more, then it looks to me like if I go, and I'm actually going to draw this line in so you can see it, right in here you can see we got some candle action touching right through this area, and I'm going to draw a line right there. And remember, support levels aren't on the penny. Support levels can be zones, and we talked about how these two lines in between them, this is a supply zone. This is a support level, but it's a zone. It can be anywhere from the top to the bottom, and as you can see, we dipped in it here, we got into the zone, we touched the very top of the zone, and then jumped below it. So it's usually a zone and not an exact dollar amount. So if we do continue lower, I would say that likely our next support level where we could or could not see a little support would be right on this line, which would be 1470, we'll call it 1475, right in that area, because we've had some touches, multiple touches in this area where it's acted as overhead resistance here and here, also here, again here, then we broke above and we came back down and it was sort of used as support before it went higher. It bounced and went higher. So it's been used multiple times, which can make it stronger than a support level that has only been tested maybe once. So now we're back down here. If we go lower, we could touch that 1475 before we start to work back to the upside. But to complicate things even further, if we do touch down here and move back up, now we've got this zone here which could act as overhead resistance. We could do a pinball back and forth between these two areas before breaking out, retesting, and then going higher. So it's all about getting the break of a level, waiting for it to pull back, testing that level as support now, and then going higher. When it's testing as support, that's when some of that nibbling of share size starts to happen. That's what I do personally when I'm buying stocks, buying ETFs. I try to nibble on support levels and then sell into resistance levels. So if you get a bounce here and we nibble some shares and we push back up here, I might take a few of my shares off. Even if it breaks through, that's okay because I still am holding some size moving further upward. It's all about just grabbing and shedding shares when you hit those support and resistance zones, in my opinion, for my trading. Now, let's jump back over. Let's go to DGAS and let's see what it's doing. Now remember, DGAS is the inverse ETF of UGAS. Both of them follow /NG natural gas futures contracts, futures charts, but DGAS is inverse to UGAS. So as UGAS drops, DGAS is going to climb. And as you can see here, if you were holding DGAS over the night or over the weekend, you're feeling pretty good because you got a massive gap to the upside. So here's that range we were looking at last week for DGAS. Now that it's gapped above this level, what's interesting about that is you can kind of watch that as a support level, which is looking good for DGAS but not so good for UGAS. And if I look at UGAS one last time, that equivalent that we just looked at is this level here, this zone here. So that support level on DGAS is this resistance level right here on UGAZ. So just to clarify that a little bit. So DGAS has got a gap up above, and now it might test this level because it's been tested here and here and here and here, and it held. Then a gap below, came back up, tested this channel, then broke above. If we get the test, we could possibly go higher on DGAS, which is lower on UGAZ. So the inverse ETFs. And the reason why this is much simpler if you follow /NG is just because typically UGAZ and DGAS both play off of this chart here. Not everyone plays it that way, but most people do. So what we're seeing here is if price action moves up higher, we could hit this level and we could get a bounce rejection back to the downside, especially if we get warm weather. Now, if we get up in this level and start to break through and we get a big cold shot of weather and everything's kind of aligning, the stars are aligning, we might get a break above with a test and then a move higher. So these are all things to consider when you're trying to break down the technical analysis of the natural gas futures market. You want to watch this gap. We have this gap. We've had it for a while. We are aware of it. We know it acts as a vacuum. It can pull price action up. It can pull price action down. And what it did here was allowed for a massive gap down. So nibbled here, pull down here. I'd probably be nibbling here, for me personally, and then waiting to see what happens back to the upside. Now remember, just as easy as this got sucked back down, this could get shoved right back up. If we get above this level with some cold weather, we could get a shove right back up to where we were and then start working further towards our goal, or most people's goal, of trying to get to $3. I know a lot of people have been talking about that, and $3, I don't know if it's going to happen. A lot of people are asking me, are we going to get to 3? And the answer is I have no idea. We just have to play what's in front of us. But historically, if we look back to last year, you can see there's a pretty hard, rigid line kind of in that 3.12 area, that if we get to 3.12, this could act as major overhead resistance. So will we get to 3? I don't know. We've already tapped this area twice up here in the 2.885. So we're going to be dealing with overhead resistance at 2.885. So we would have to get through that in order to get to 3. So we'll see what happens there. So now let's jump back over. I want to talk about a natural gas story. We've mentioned this in the past, but I want to dive into it a little bit again now because it's super interesting, and I think it can really impact natural gas trading down the line, next year, the year after, 10 years from now. For all of us who are interested in natural gas futures, this could have a huge impact. So let me share that story with you real quick.
So in previous videos, we've talked about Berkeley, California, as well as Menlo Park putting bans in place regarding natural gas in newly constructed homes. Well, I had a subscriber send me this article today, and I find it really interesting that this trend is building steam. No pun intended. This natural gas trend is known as building electrification, which is swapping out natural gas appliances with electric appliances, aka fuel switching, in order to reduce the city's overall carbon footprint. So I feel the trend building due to the number of cities and areas that are considering legislation regarding this topic. Both Los Angeles and San Francisco are considering ordinances. New Jersey is drafting an energy master plan that would end natural gas use in their buildings by 2030. Maine has new laws that will reduce natural gas in buildings, and 8 additional states, along with DC and Puerto Rico, have established 100% clean energy goals. This is all due to the fact that electricity is steadily getting cleaner and climate goals are becoming extremely urgent. So I wanted to briefly introduce this topic to you, and I'll put the link to the article below in the description, but I want you to comment right now real quick and just say, Jimmy, I'm going to read the article. And then in the future, we can discuss it further. I hope this video was helpful. Hope you were all green today, and we'll see you tomorrow.